Welcome to QB Power Hour. Today is January 14th, 2016, 12 p.m. Eastern. The topics for today are Advanced Payroll Topics Part 1. And the reason why I say Part 1 is because as I was going through all the possible payroll topics, I don't see how we can possibly cover everything I want to cover in one session. So the agenda, we're going to talk about QB Power real quick, about the guests, the CPE process. We'll have some announcements. And then the topics and learning objectives today are learning advanced topics in QuickBooks Payroll. Now, Michelle Long is not with us today because she's in the QuickBooks VCon doing a QBO cert prep, basic QBO cert prep, which happened to be at the same time, but we didn't want to cancel it, so we wanted to keep going with our payroll topic. Myself, Hector Garcia, I'm a CPA, work and live in Miami, Florida. I do QuickBooks training almost for a living, but I also have my own accounting practice, and love to present these topics to you today. About QB Power Hour in general, we are every 2 weeks. We did have a huge break between December 17th, I believe, and today. So it's been a whole month since we haven't done a QB Power Hour. So normally we are every other week. However, next week, we're going to have a special episode where I'm going to talk about importing bank transactions into QuickBooks. And we're going to go in depth in some of the tools that I use, kind of my toolkit on how to import transactions, whether they're in Excel or bank feeds or in CSV. We're going to talk about different topics, the different ways that I do importing. Now, normally we do 50-50 QuickBooks Desktop, QuickBooks Online. Well, however, QuickBooks Payroll in the desktop, it's kind of a heavy topic. So this episode may be 100% desktop. We'll see how far we'll go. The main sponsors and guests is me and Michelle. Me and Michelle are the ones that actually put the time and effort to put this together. We are not paid by Intuit or sponsored by Intuit in any way, although we'll talk about QuickBooks and Intuit, and we're sort of Intuit friendly. It's not their voice, it's our voice, okay? Anyway, CPE process, as long as you're on for at least 50 minutes, you will get your CPE. So as long as you're logged in through 50 minutes, you must write down the CPE password when it comes up. And near the end of the webinar, I'll have a polling question password. Make sure you answer that. In order to get your CPE, you have to get that polling question correctly. And then CPE certificates will be emailed to you in about 3 weeks. Now, the only major upcoming event we have here, it's Scaling New Heights, scalingnewheights.com, which is going to be May 22nd to the 25th in Atlantis Resort in Bahamas. It's worth looking at. It's going to be a great event, and there will be QuickBooks Online Advanced Certification coming with it. These are basically I was writing down all the possible advanced payroll topics that I was thinking we could cover. And in a regular sort of, QuickBooks fashion, in a QB Power Hour fashion, we try to cover way too many topics in way too little time. So I wrote down this slide to talk about the topics that I would like to cover. However, I really don't think that we'll be able to cover all of them in one session. So I'm just going to go down the list here, see how many we can get, and whatever we cannot get will be the next topics for part 2. Anyway, we're going to get started with anatomy of a paycheck. So I want to make sure that just through the chat, you can see the slide called the anatomy of a paycheck. Can you just say yes or something like that? Yeah, okay. All right, so this is a review. We had about 50-50 people telling us that we're very proficient in payroll, and some were saying that they were okay. So this is the basic anatomy of the paycheck. And as I go and talk about pre-tax and after-tax, I want to make sure that these mechanics are understood really well. So gross wages are going to be hours times the rate, salary, commission, bonus, or piecemeal. Any payment that gets paid to the employee, that's going to be considered gross wages. We're going to add something called pre-tax addition, which are any payments paid to the employee that are subject to tax. And then we're going to reduce pre-tax deductions, which are any deductions taken out of the employee where that deduction actually reduces your taxable wages. One of the classic examples for this would be health insurance. So if there's health insurance that the employee pays for, that amount of health insurance that they pay is considered pre-tax. There's another classic pre-tax, which is a 401k. 401k gets reduced from the employee contributions get reduced from the wages, and that reduces their taxable wages. Now, there's something tricky about 401k because it actually reduces some of the payroll taxes, but not all of them. So that's kind of an interesting one. All right. So after you have the taxable wages, you're going to reduce from it the payroll taxes. Then you're going to add the after tax reimbursements, which are non-taxable reimbursements. So the terminology could be a little tricky. So just kind of think about it. Sometimes it's called after tax reimbursement, sometimes it's called non-taxable reimbursement. And then we reduce the after tax deduction. So if you were taking money away from their employee because you're paying back an employee loan of some sort, then that would be an after tax deduction. And then all the way at the end, once you calculate all that, you get the net paycheck. So I wanted to just make sure that that was sort of clear before we actually get deep into the payroll items. Then for some of the federal taxes get calculated by QuickBooks with the payroll subscription based on the information that's on the W-4. So in the W-4 form, that's where you put whether you're married or single, and the number of allowances. And that's not really number of dependents. People confuse dependents and allowances. Number of allowances is a formula in the W-4 form. And then based on that information, I'm going to give you this quick link here for the people that don't know. I'm going to Google publication 15. And publication 15 is a big PDF document given by the IRS that actually contains how to withhold taxes if you were doing taxes manually. Again, if you're using QuickBooks Payroll, generally you don't have to worry about this. However, I find it useful when a client is asking me about payroll to take this form out, and then they can see that, look, it's 68 pages worth of stuff, and tell the client, yeah, sure, you could do your own payroll, just read through this document. And then at the end they say, well, okay, I guess I understand why I need to hire a company to do payroll for me. So it's kind of it's a good tool to have to not necessarily scare the client out of payroll, just so the client understands that payroll is kind of a complex topic. So for example, in this table, this is for single people getting paid monthly. So if a single person gets paid monthly $2,200, and they have 1, 2, 3 allowances, the federal withholding is 165. You technically don't need a payroll subscription. You can pull all the information from here. However, again, it's kind of a tedious task, but I find it useful just for context to show publication 15. You see all the information where it comes from. Anyway, even some people that are proficient at payroll, they appreciate seeing that little form in there. Anyway, Social Security is going to be 6.2% up to 118,500. That was the last rate on 2015. That means anyone that gets paid more than 118,500, that average does not pay Social Security. Medicare, it's always across the board in all the wages, and that's 1.545%. And then thanks to Obamacare, there's an additional, I guess that's sarcastic, right? Thanks to Obamacare, there's an additional Medicare expense of 0.9% of the amount over 200,000 or for a single, or 250,000 for married filing jointly. So anyone that gets paid over that amount, you also have to calculate that additional 0.9% of Medicare. Employer must match Social Security and Medicare, which is 7.65%, and send that to the IRS together with the employee's uh, contribution to taxes. Now, when my clients ask me, how much does it cost to have employees? Well, the first thing I say is, look, right off the bat, it's going to be at least 7.65%. That's your out-of-pocket cost as an employer. And then you're going to have some of the other local taxes and unemployment taxes that are up to that. So I think the magic number that I use is between 8 and 9, depending on what state it is. So when a client tells me how much would an employee cost me, I say, look, between 8 and 9% of their wages. That's your out-of-pocket cost on top of the wages expense. And then if you got workers' comp on top of that, and certain states have other sort of taxes and fees that they charge, that's obviously varying state by state. Now, the IRS charges a federal unemployment, which is called FUTA, or sometimes it's referred as FUTA, which is supposed to be 5.4% of the first $7,000. However, because state also charges state unemployment tax, or SUTA, the IRS gives a credit, but these credits vary by state. So you have to see the instructions of the 940 form to see exactly how much they are going to pay depending on what state they're in. In Florida, for example, my food tag goes all the way down to 0.6% because of how the credit works. And then kind of a strange thing, if the state is underfunded and has to borrow from the government to pay their unemployment, that rate goes up. But again, you actually don't know that. It actually comes as a surprise later on. We're going to move on to now managing employee loans. So let me go into QuickBooks here, and I'm going to go ahead and go into the list menu and click on payroll item list. So we're going to talk about employee loans, right? So we're going to lend our employee some money in a paycheck, and then we're going to get it back in a different paycheck or across multiple paychecks. So I'm going to create a new item here. I'll just right click and click a new, or go to payroll item down here and click new. So there's the easy setup, and then there's the custom setup. I actually don't like the easy setup because it takes me to another screen, and I think it's a little bit slow. Plus, most of us, I think that after watching this webinar, will be very comfortable with the custom setup. So I choose custom setup in this cases. I'll hit next. And then it's asking me, what is this? Is this a wage? Is this an addition? Is this a deduction? Is this a company contribution? Now, technically, an employee loan is both an addition and a deduction, right? It's an addition when we lend the money, and it's going to be a deduction when we take the money out. So we're going to start with addition because also it says it right here, employee loan, and then I'll click on next, and then I'm just going to call this loan, and then I'll hit next. And then it tells me what account should I use to track employee loans. It's definitely not going to be payroll expenses, right? We're going to have to go into the balance sheet somewhere and look for a current asset called employee loans. Let's see if we have anything like that already. Right here, employee advances. That's perfect. So we have a current asset called employee advances, and that's the account that we're going to use for employee loans. We'll hit next, and then it tells me what type of tax tracking does this have. So if I choose anything like compensation, that is going to actually tell you down here, what taxes are going to be affected by it. Employee loans do not affect compensation. So they should be none, right? That means there's no tax tracking. That means that whatever we do with this employee loan, it's going to be considered a non-taxable event, a pre-tax addition. So we're going to select none. So we'll hit next. And then it's going to tell me, well, real quick, because you chose none, we went ahead and removed the check mark of all the payroll items that are going to be affected by this employee loan. And that is correct. That is absolutely correct. None of these taxes are affected by this employee loan. Now, in some states, and somebody's saying that in Canada, employee loans are taxable. So this is the concept. An advance of pay. So if you're advancing somebody's paycheck, that is taxable income. But if you're giving them a loan and it's a routine loan, then it is not. So very important. Depends if you call it employee advance or paycheck advance or advance pay, that is in theory taxable wages. But if it's just a small loan, a routine loan, a couple $100 that you're not really paying them ahead of time, then that is not considered a taxable piece of income for the employee or for the employer. So we're going to leave all these checks out. Having these checks out, so not checked, unchecked, means that there's no taxes being affected by the loan. So I'll go ahead and click on next, and then it tells me, how is this calculated? Is it by hours, by quantity? Of course, the answer is neither, because this is not a wage. This is just a standalone item in the payroll, in the paycheck. So I'm going to click neither and then click next. And then it says, does this affect your gross pay or your net pay? Again, this doesn't matter what I pick here, again, because we chose as a non-taxable, right? So I really don't care about either one of these. So I'm going to click on next. And then it says, is there a percentage or a limit? Now, this is not applicable at this point. The limits are useful for like health insurance, when an employee is supposed to pay, let's say, $3,000 a year in health insurance, and you want to limit it. So, once the employees hit that threshold and whatever that payroll item is, that's what that limit is useful for. In this case, we don't need to deal with that limit. So we're going to click on finish, and there's my item called loan. All right, so let me go ahead and prepare a paycheck here. So I'm going to go to payroll, and then I click on start scheduled payroll. And I may have missed something now that I'm thinking about it. I forgot to add that item into the employee's profile, right? So whenever I click on continue here, and I'm going to open any of these paycheck details. So I'm going to click OK here. down here where it says other payroll items, loan would be one of the options. Now, it didn't come up as a default. It did not come up as a default because we didn't set it up. However, I will set it up as a default when we actually schedule it to be reimbursed. So when we schedule the reimbursement, I am going to put that in there. So I'm going to start by just manually putting loan in there, and then I'm going to put $500. And I want you to kind of notice something. Um, if you look at the payroll taxes here, federal withholding is 93, right? When I put the loan at 0 and hit tab, my federal withholding is still 93. If I put the loan at 1,000, my federal withholding is still 93. This means that this loan is not affecting any of my taxes. However, this health insurance item, I assume it is a pre-tax deduction. So if I do change this item here, so I'm just going to put negative 250 here for a second, and I want you to watch the federal withholding, that should change. Okay, actually it didn't. That means this health insurance item is not set up as a pre-tax deduction. So we're gonna have to go back and check that. So this health insurance is not set up as a pre-tax deduction. That's why it didn't change. This is a sample file, so we have to go back and fix that, obviously. So I'm gonna go ahead and lend the employee $500, which is ultimately gonna affect their net paycheck. All the other taxes are gonna be unaffected. I'm gonna click Save and Next, and then I'll just hit Save and Close for the other paychecks. Let me go back here for a second, and I'm just going to do Dan Miller for a second. And then I'll hit Continue and Continue. Okay, so let me go ahead and close this and then pull up a profit and loss and balance sheet because I want to make sure that we are 100% clear on what we did here accounting wise. So let me go to Window, Tile Vertically. So right now we removed 1826 from our bank account, which was basically the net paycheck. Okay, so that's the money that came out of my bank account for the next paycheck. We have an asset called employee advance because we paid the employee $500. That's sitting there in our assets. And then we have our payroll liabilities. This is what we owe our government. Now on the profit and loss side, we have a gross wages, we have all of our taxes, and then we have workers' comp, which this particular paycheck happened to have workers' comp in the sample file is turned on. Maybe we'll get to workers' comp. Not 100% sure if we'll have time to that. Anyway, so then that's done. So on the next paycheck, what I want to do is I want to start getting this $500 back. But we agreed that we're going to get it in $100 increments. So what I'm going to do is I'm going to go into employees, and then I'm going to go into Employee Center. Then I'm going to go to Dan Miller, right click and click on Edit. Okay, then in here, I'm going to click on Payroll Info. And then here where it says deductions, additions, deductions, and company contributions, I'm going to go ahead and add loan here. And then I'm going to put negative 100. And then the limit in this case will be, I wonder why that didn't come, the negative's not taking, but we'll see about that. Maybe because it's set up as a deduction. So on the loan, as a matter of fact, I know what happens. This loan is set up as, I just noticed that this loan is set up as an addition, not a deduction. So I'm going to have to create actually a new item. I'm going to call a new item, which is a deduction. And we're going to call this loan payback. Just notice that. So we'll create the loan payback as a deduction. Actually, let me do it the traditional way. That way we're not getting confused here about the process. So let me go into the payroll item list, maximize that. I'll click on new, and then I'll do custom setup. We'll make this a deduction, and then we'll call this loan repayment, something like that. And then we'll hit next. And then this stuff we can, this agency and stuff like that, we can, we don't need that. But the liability account in this case would be employee advances, and then hit next. And then the tax tracking would be none. That would stay the same. So no tax tracking. Hit next. Again, none of the taxes are being affected. Hit next. Again, neither. I don't need to worry about this. So I hit next. Again, I still don't have to worry about this because there's no default limits. It's just a limit per employee. Okay, so now I got my loan repayment deduction in there. Let me go back and edit Dan T. Miller, and then go back to payroll info, and then add here loan repayment. There we go. Now this is going to work. So I'm going to put here negative $100. Okay, this will take a negative now because it's a deduction, not an addition. And then the limit in this case would be 500. That way, I know that once I hit 500, this system will stop taking those loan repayments. So I'm going to go ahead and hit OK. and then I'll do one more payroll here. So I'm going to do, I'll do a scheduled payroll again, and then I'll just select Dan Mailer here. I'll hit continue. Then I'll open my paycheck detail. And then there it is. My loan repayment automatically came in there. My further withholding is still not affected, right? Because it's sort of a fixed salary. And then the nice thing about this is once this goes through 5 checks in total, once it goes through 5 checks, then I'll stop taking the loan repayment. All right, let me go create paycheck, and then we'll go back and see our balance sheet here, and our balance sheet says that they owe us $400 now. Okay, so really that's really what I wanted to cover in terms of managing employee loans. And a lot of the feedback we got through QB Power Hour is Hector, go slower and go more in depth. So that's actually what I'm trying to do. But again, I won't be able to cover that many topics like I usually do. I usually want to just cover a million topics because I'm crazy like that. But I was asked to go slower and go more in depth. So I think that was a comprehensive look in how to manage employee loans. So let's take a look at payroll, job, and class costing. So let me go back into QuickBooks here. I'm gonna go to, let me just hit escape a couple times here. I'll click on edit, preferences, and then I'm gonna go down to payroll and employees, and then I'm gonna click on company preferences. And then I have to make sure this little checkbox here called job costing, class, and item tracking for paycheck expense, I have to make sure that I select this box. Now, if I am going to assign a paycheck to a class, okay, I have to make sure that I select whether I'm going to do it the entire paycheck goes to the class or item by item goes to a class. The difference is if I select this one, earning items, I'm going to have to select a class on every single line item in the paycheck. If I select this one, I would just select one class and my entire paycheck goes to one class. However, my my job costing is still in an item basis. Okay, so I'm going to go ahead and do this per item because we're going to go into really in depth into payroll job costing. I'm going to go ahead and click OK. And then at the heart of payroll job costing, it's going to be the timesheet. Okay, so I'm going to go into here, employees, enter time, use weekly timesheet. I'm going to go ahead and select one of my employees here. Where is it? Elizabeth Mason. And then I'm going to go ahead and select the customer job that I want to job cost their time to. So I'm going to go ahead and select the first customer, Abercrombie Christie. And then I'm going to skip a line and I'll tell you why in a second. I'll select the second customer, which is Robert Allard. And then I'll select my third customer, Baker Chris. So let's assume for a second that Elizabeth Mason went to work that week and then she worked in 3 specific customers. So here at the service item, this is only useful for the billable expenses. So if I need to know what billable expense or billable line item, if I'm going to invoice this, is going to hit, I can select this one. Okay, so I'm going to go ahead and just select installation for all of these for a minute. This doesn't affect the payroll side, but it does affect the billable side. So I'm going to uncheck billable on these because I'm not focused on billable right now. And then I'm going to go ahead and just select a class here. So I'm going to put here remodel, and this one is remodel, and this one is overhead. So now let's say on Monday, Elizabeth spent 7 hours at Abercrombie Christie, 1 hour at Robert Allard. On Tuesday, spent 4 hours at Robert Allard, 4 hours in Abercrombie, 3 in Robert Allard, 1 hour in Chris Baker. I'm going to tell you in a second how this gets a little bit tricky. The reason why I skip a line, it has to do with overtime. Now, overtime is one of these like really, really tricky pieces, and I don't have a good solution for overtime. Is a really sort of complex topic. But if you ever go into a customer, let's say, for example, I spend 7 hours in Abercrombie Christie and then I spend 2 hours in Robert Allard, the trick here is, who do I assign this hour of overtime? Do I assign it to Abercrombie Christie or do I assign it to, in this case, to Robert Allard? That's kind of the tricky piece, right? So I don't have a solution. I'm just mentioning to you why I need to have that special line in there so I can track my overtime separately because we may need to use a different payroll item for overtime. So let me just finish here I'll put 9 hours here, and then I'll put 7 hours here. So we're going 1 hour overtime. I'm going to go ahead and hit save and close. Okay. Then I'm going to go ahead and process my payroll. So I'm going to go to employees, payroll center, and then I'm going to do an unscheduled payroll, and then I'm going to select that same time frame that was there. I believe that week was actually, let me double check that real quick. So let me go to employees, enter time, use weekly timesheet, and this was Elizabeth Mason, and that was December 20th. Okay, so I have to just make sure that I have the date correctly, because if not, it won't work. So that was 12/20/2020, and then the paycheck date will maybe be on the 21st, whatever it happens to be. Okay, all right, and then I'm gonna just select Elizabeth Mason in this case, and then I'm gonna hit continue, and then I'm gonna click on open paycheck detail, and I'm supposed to get a breakdown of all these things per customer. However, you notice here that I don't have my payroll data, my timesheet data in here, because it doesn't happen by default. It's one of the tricky pieces that payroll job costing doesn't happen by default. So I could do a timesheet, but if I don't tell QuickBooks that I want to create a paycheck with job costing for that particular employee, you're not gonna see it here, and then you're gonna have to do double work selecting, the customers in here. So I'm gonna hit cancel here, and then I'm going to click on finish later, and then I'm going to go into employees, right click on Elizabeth Mason, click on edit employee, and then somewhere here, don't always remember it by heart, there's a little checkbox here. There it is, use time data to create paychecks. So I'm going to go ahead and check that. Then I'm going to go ahead and I'm going to remove, just to kind of simplify things, I'm going to remove sick hourly and vacation hourly from the mix here. I just, it get too complicated. So for now, I'll just remove that. And I'm going to put here, use time data to create paychecks. I'm going to go ahead and hit OK. I'm going to go back into my timesheet real quick. Okay, there's my timesheet. Now, notice a new thing happened when I went into my timesheet, and before I didn't have a payroll item. The reason why I didn't have a payroll item before is because I did not tell QuickBooks. I did not tell QuickBooks that this employee was going to be using um, job costing data from a timesheet in order to create a paycheck. So once I hit the little checkbox, now I have a payroll item in here. And this is where I was mentioning earlier. Let me go ahead and put here regular pay, and regular pay. And then this is when I meant that we're supposed to have a line between the jobs. Okay, because if I happen to want to assign, in this case, we have 1 hour of overtime for the whole week, and I need to know what job I'm going to assign that hour of overtime. And let's assume that the hour of overtime is going to be used in this 9-hour day or this 9-hour day, whichever one it is. I need that second line there so I can add my overtime. So for example, I'm going to assign it to Robert Allard. I'm going to go ahead and hit copy here, hit paste. I'll select the same service item, but in this case, this is going to be overtime rate. And then I'll use the same class here, and then I'll put here 1 hour for regular and then 1 hour for overtime. Trust me, overtime is one of those crazy things in QuickBooks. It's really, really difficult to manage, but it will require a manual process of choosing which job gets assigned the overtime, because of course, overtime gets charged to the job, and you need to know which job is going to have that larger job cost. This is why I suggest that we skip these lines in here. So let me go ahead and hit save and close. I'll hit yes, and then go back to payroll, do unscheduled payroll again. I'm going to select, what was it, 12/20/2020. Okay, and then 12/21/2020. Perfect. And then I'm going to select Elizabeth Mason. Notice that I have now 40 hours of regular, 1 hour of overtime. When I hit continue, I can now open the paycheck detail. And then I'm going to see, this is a beautiful thing here. This is why QuickBooks Desktop Payroll is so awesome, because it would actually break down the hours with the workers' comp code. And that's one of the advanced topics that I also want to talk about. Again, I'm not sure if I'll have time to go through it, but it will do it with the workers' comp code. And by the way, the point of the workers' comp code is so QuickBooks calculates a rate, an expense that that calculates the workers' comp. All right. So by the way, overtime. Somebody saying that in some states overtime is double time. In the case of Florida, for example, overtime is times and a half. So this is not represented in double time. This is presented in times and a half. Anyway, so the workers' comp code is used to impute workers' comp expenses into specific jobs. And you're going to see how that works. That's actually pretty neat how that works. And then here I have all my customer jobs. I have all my classes. On that setting that I mentioned earlier, if I hadn't selected a class per line item, then this class column would be completely out and it would be somewhere around here. And then I would select and class the entire payroll. But I do like to have a class per payroll item because it allows me to just get into a lot more detail there. So let me go ahead and hit save and close. And I'll hit create paycheck. Now I'm going to pull up a profit and loss by customer. So I'm going to go to company financial, profit and loss by job. I'm going to select here last fiscal year. What happened here? Let me just do all. This is a blank file. So now I'm seeing the only payroll expenses that I have here that have jobs attached to it are here, and they're assigned by customer. So you have this much of workers' comp assigned to Abercrombie Christie. I haven't talked about workers' comp yet, but this much of gross wages and this much of taxes. One thing that is really, truly amazing and awesome about QuickBooks Desktop job costing is that it will split the gross wages, the taxes, and the workers' comp evenly across the customers, and it will do that in a really, really smart manner and doesn't really require a lot of manual work other than managing that timesheet. That timesheet is crucial. Let me see. Somebody is saying that they cannot do this in QBO. Yep, absolutely. You cannot see this in QBO. That's one of the major, I would say that's one of the major areas where QBO has deficiencies on job costing. QBO or QuickBooks Online cannot do this at all. Now, QuickBooks Online can do the loan the same way. I think absolutely the same way. But for job costing, this is how this will work. Now, let's see what else. What are the topics we have here? So that's payroll, job, and class tracking. Now, we have about 15 minutes left, so I'm gonna pick my poison here. Let me, instead of going into managing vacation and sick time, because that could take a little bit. Let me go back to the timesheet and talk about the difference between using the timesheet for job costing, for billable time, and for payroll processing. So I'm going to cover this topic, and then I'll cover this one real quick. This is a kind of a quick, interesting little trick, and then maybe I'll talk about workers' comp, and I think maybe that's where we'll stop today. Anyway, let me go back to the timesheet here. I'm going to go to employees, enter time, and use weekly timesheet. Okay, I'm going to go ahead and select my customer again, Elizabeth Mason. So there are 3 reasons why you would use a timesheet. You would use a timesheet, one, to process job costing information, which we just showed you how to do. You would use a timesheet to create billable time, which basically means we put a check mark on these things here. Okay, and that billable time is tied to this service item. So if I'm going to pick labor here just to show you. So if I pick labor here, an installation here. So when I go invoice Abercrombie Christie, the labor service item is the one that's going to show up in the invoice. When I go invoice Allen Robert, the installation service item is the one that's going to show in the invoice. So that's what service item is for. This is for billable time. So again, you're using the timesheet for billable time, maybe you're not using it for payroll at all because you're using maybe an outside payroll system, right? So then you'll use a timesheet just for billable time. That's fine. You don't need to have payroll enabled to use this for billable time. You only need the payroll service enabled to be able to do job costing or to be able to do this for payroll processing. So if you don't have the payroll subscription, which is the additional fee you have to pay into it for payroll, the only thing you can do with timesheet without the payroll subscription, it's billable time. So again, for job costing and for processing payroll, you need to have that payroll subscription. I'm gonna go ahead and hit save and close, and then I'm gonna create an invoice for Abercrombie Christie. So I'll go to customer here, create invoice, and then I'm going to select Abercrombie Christie. I'm going to have this pop up saying that there's outstanding billable time and cost. I'll select the first option there, select outstanding billable time and cost. I'll hit OK. And then this is all from the paychecks. from the timesheet actually. So if I select all of these here, okay, and I'm going to show you a key component, extremely important key component here. Notice that all of these are labor, and these are all broken down by day. One of the things that annoys people is I don't want to charge them by day. Maybe I want to charge them for the whole week. So here where it says options, it gives you the options. It says combine all the activities into one service item or enter them separately and bring the notes. So I'm going to show you how that works in a second. So I'm going to go ahead and click on enter separately and bring the notes, and then I'm going to hit OK, and then I'm going to hit cancel here for a second. Let me go back into my timesheet, and I'm going to put some notes, right? So we can just kind of talk about that feature in a comprehensive way. So where is my Elizabeth Mason? There she is. That's what these notes here are. So if we're going to put here worked on window, and then this one, yes, and then I'll put here worked on door, and then I'll put here whatever it is, right? So for Abercrombie Christie, the only note that's going to prevail throughout all 5 days is worked on window. So if I need to have separate notes, again, I want to itemize them on my invoice, okay? I would have to create 2 lines, right? I know this gets a little bit tedious here. I would have to create 2 lines here. And let's say, let me just get rid of this comment here. And then I'll put here regular pay. And then there's my workers' comp. And I'm going to put here worked on door. And if I want these 3 hours to be worked on window and Friday and Saturday to be worked on door, I have to create 2 separate line items. And then I have to move the 9 down here and move this 7 down here. And then I'm going to go ahead and hit just a remodel too and hit save and close. So then when again, because I want different notes. So when I go to add time and costs and I select all these things here and I go to options and I select enter a separate line with each activity with the notes, right? That's a key component here. I want the notes. So I'm going to hit OK and then hit OK. Then the worked in window and worked in door notes come through. If I don't use that, then the notes won't come through. And then I'll show you that for a second. Let me go ahead and hit clear. And then I'll pick Abercrombie Christie again. And then I click select billable, time and costs. And then I'm going to hit this option. And instead of doing the details, I'm just going to do combine activities on the same service item. And then I'll hit OK, select all these. And then you're going to see a single line item of $34 with no notes. Okay, so that's really the big difference between that. Really, really big difference between that. Okay, now I'm having a lot of questions here saying, why wouldn't you use T-Sheets for time tracking? Do you recommend T-Sheets for this sort of thing, et cetera, et cetera? I'm gonna have a slide here on T-Sheets real quick, and then I'll ask you a question if you're interested. Well, I want to see if there's enough interest to build an entire webinar on a T-Sheets workflow. So we'll talk about that. But in essence, if you were using a third-party app like T-Sheets, let me just go back to my timesheet here. If I was using a third-party app like T-Sheets, what T-Sheets will do is it will control this process, right? All this data entry and all this job costing and this payroll items and these classes and this time, all this stuff will be managed through a third-party app like T-Sheets. And then when it syncs to QuickBooks Desktop, it will come in just like this and then allow you to do all the workflow moving forward. So the purpose of using a third-party timesheet app like T-Sheets is to do this work on an iPhone, on a website, on an iPad, have additional stuff like GPS tracking and stuff like that, clock in, clock out, stuff that QuickBooks really cannot do. So if you don't use a third-party app like T-Sheets, you have to transcribe all this data into the timesheet in order to achieve all this job costing detail. And if you use T-Sheets, all T-Sheets will do is manage this process for you and then sync it and bring it to QuickBooks into a timesheet just like this. All right. Okay. So that was job costing on workers for workers' comp. So the last topic I'll talk about here, sorry, that was the timesheets detail. So let me talk about workers' comp for a second. I think that's going to be an interesting piece. A lot of people are unfamiliar with it. Matter of fact, I'm personally kind of unfamiliar with it. I am not an expert in workers' comp, but I want to explain to you how workers' comp works in the purpose of job costing. So I'm going to click on lists. I'm going to click on workers' comp list. And then basically on the workers' comp list, I can create multiple workers' comp codes that add a burden to the cost. Now, when you pay workers' comp, that's typically just going to be a check that you write to workers' comp and you put it into your workers' comp expense, and that's it. But when we do workers' comp for job costing, we're not going to take the workers' comp payment and split it by job. We're going to allow the paycheck to do that for us. So the way this works is I'm going to create a new workers' comp code, and I'm just going to call this 9999. Okay, the actual codes that has to do with the workers' comp company, don't spend too much time thinking about that. I'm just going to call this office work. Okay, but what really matters in here is the rate. So this rate is based on a per $100 basis. So if I wanted to add 15% of my labor to my job costing, attributed to the cost of my workers' comp, I would put there $15, right? Because it's $15 based on $100 gross wages. And the rate can change every year. This is why this is there. So I'm just going to go ahead and put an old year here. So I'm going to put here 28, whatever. And then I click on OK. And then there's my workers' comp called office work 999. So when I go set up one of my employees, so let me go into employees, employee center. Let me go ahead and go to Greg, go to edit employee. Then I'm going to go down to workers' comp and I'm going to change his labor code. His labor code is 999. That means when I create a paycheck for Greg, 15% of that paycheck is going to be assigned to my workers' comp to my workers' comp cost when I do job costing. So let me go ahead and hit OK, and then I'm going to do an unscheduled paycheck for Greg. I'm going to hit put here 2020, 12, 20, 2020, which is kind of the same thing we're doing here. I'm going to hit yes there, and then I'll hit open paycheck detail, and then I'm just going to do the job costing from here real quick. So I'll do here 80 hours, and then the customer job, I'll put here Mike Ballack, and then on the gross pay, I'm just going to simplify things, I'm going to modify this. Actually, that's fine. So let's leave it like that. I really don't mind it. So basically what this is going to do is the gross pay is 1380. Let me run a calculator real quick so I just know what 15% of that is. So 1380 times 0.15, so that's $207. So this is going to take $207 and assign it to a job cost workers' comp component to the job Mike Ballack. So I'm going to go ahead and hit save and close, hit continue, create the paycheck. I'm going to run, again, a profit and loss by job. And I don't know how I miscalculated that somehow, but it came out to 196.65. I have to figure out why that didn't come out to 207, but whatever. Maybe I missed something somewhere. But this is how workers' comp works in a nutshell. It will assign an additional expense to that job, and then when you actually pay the paycheck, you're going to use the same workers' comp expense. So it's all going to sort of even out when you pay that. But for job costing purposes, that's how that works. That's how workers' comp works. Okay, so the last topic I'll cover, because we're almost out of time, is how to turn on manual payroll. But what I'll do real quick is, let me run a slide here. So I wanted to ask you a polling question. I know T-Sheets is the app that has the best marketing on the planet. I mean, they've done an incredible job at making sure that almost every QuickBooks user knows that T-Sheets exists, and T-Sheets works really well with QuickBooks. My question is, because I've had in a couple of emails, and whether it's worth it for us to do an entire webinar on an end-to-end workflow with T-Sheets. So how would it work putting the stuff in T-Sheets and running the payroll, and how the work I do in T-Sheets ultimately affects my payroll and my job costing. So I'm going to go ahead and launch the poll, and I just liked your feedback. Is it worth it for us to do an entire episode just on this?